Picture this. $2,800 lands in your bank account every month just from your investments paying dividends. Sounds too good to be true, doesn't it? But for me, it's not a fantasy. It's my life, all thanks to Warren Buffett's dividend strategy. I'm here to show you how I reached this level of financial independence and how you can do the same. To live on dividends, you don't need to be rich. You need the right game plan. Warren Buffett's ideas have shown me the way to make this happen. Let's start with the basics. What are dividends and why do they matter? Companies pay dividends to their shareholders in cash. Warren Buffett has always pushed for putting money into top-notch companies that pay dividends. His method focuses on picking businesses with solid foundations and a steady track record of dividend payments. Let's be honest, creating passive income can be tougher than it seems. Many folks run into problems because of some typical roadblocks. Let's take a closer look at these issues. 1. Starting cash needs. A lot of passive income options such as property or starting a company need a big chunk of money up front. If you're short on cash to start, you might struggle to get going. 2. Know-how and tricky stuff. Some ways to earn hands-off cash can be hard to grasp and need special skills. Looking after rental homes or running a good online shop isn't easy, and without the right know-how, you could feel lost. 3. Sweat and hours. While the aim is to make money without much effort, setting up many of these income streams can take a ton of time and hard work. For example, growing a popular blog or making digital goods means putting in a lot of work at the start. 4. Market ups and downs. Putting money into things can be risky, and markets can surprise you. Whether it's stocks, houses, or other stuff you buy, changes can affect how much money you make. 5. Growth hurdles. Not all hands-off income sources grow. You might find that putting in a little money doesn't give you much back, and to make it bigger, you need more cash and effort. Now, this is where dividends step in as a great fix. Here's why they stand out. Less cash to start. You don't need a mountain of money to begin buying stocks that pay dividends. You can kick off with a smaller amount and still get regular payments. Easy to understand. Dividends are simple. You buy shares in companies that give out dividends, and you start getting payments without much fuss. No need to take care of properties or run a business. Money comes in regularly. Dividends give you a steady expected income every 3 months. This steady flow helps you plan your money and budget, making it easier to count on. Money makes more money. By using your dividends to buy more shares, you can make your money grow faster over time, which speeds up how much income you get. Lower risk. Companies that pay dividends are usually well-established and stable. This makes them a safer option compared to riskier investments. Ease of scaling. To grow your dividend income, you can make more investments or reinvest your earnings. This approach scales well without needing complex changes. Passive income can be tough, but dividends provide a practical fix. They mix lower risk with steady cash flow and are simpler to handle and grow. Want to build a steady income stream without the headache? Dividend investing could be your ticket to financial freedom. We've talked about why dividends can be a great source of passive income. Let's look at how Warren Buffett, one of the best investors ever, puts money into dividend stocks and why his method works so well. Warren Buffett chooses to invest in companies with strong basics. He searches for businesses that have a lasting edge over competitors, steady profits, and good leaders. These companies tend to pay dividends you can count on. Buffett's way of investing focuses on the big picture. He likes to keep dividend-paying stocks for a long time, letting the dividends pile up and grow over years. This waiting game allows him to gain from both the money from dividends and the possible rise in stock value. Buffett often puts his dividend money back into buying more shares of companies he trusts. This snowball effect means the income from dividends gets bigger as time goes on, making his overall earnings even better. Buffett is famous for his value investing strategy. He looks for stocks that cost less than their actual value. By buying good companies at fair prices, he boosts his chances of big gains, including payouts. Buffett spreads his money around, but he sticks to areas and firms he knows well. This smart mix helps cut risk while letting him cash in on steady income from reliable sources. Buffett keeps an eye on the financial well-being of the companies he puts his money into. He likes companies with good cash flow and little debt, which can keep paying or raise their dividends even when the economy slows down. So, what are the benefits of Warren Buffett's dividend investment strategy? 1. Reliable income stream. By putting money into top-notch, dividend-paying companies, Buffett makes sure he has a steady and dependable income stream. This stability plays a key role in long-term money planning and growing wealth. 2. Growth through compounding. Putting dividends back into investments allows your money to grow more and more over time. This method has a strong effect on increasing wealth. 3. Less risk. Putting money into stable companies that have paid dividends for a long time can lower your investment risk. These companies often handle tough economic times better. 4. Building wealth over time. Buffett's long-view approach gives his investments time to grow and make big returns. This fits with dividend investing, where being patient pays off in the end. Warren Buffett invests in dividend stocks by focusing on quality, taking his time, and putting money back in. Now that we've looked at how Warren Buffett puts money into dividend stocks in a smart way, let's dig into some of his main ideas about dividend investing and how these ideas have been key in his path to having lots of money. Buffett stresses investing in top-notch companies that show a strong history of making money and staying stable. He thinks businesses with good basics and a steady record of paying dividends can better handle ups and downs in the economy. Buffett says it's key to put money into companies with a moat, an edge that keeps rivals at bay. These firms stand a better chance of keeping their profits up and, as a result, continuing to pay dividends. Buffett backs the idea of putting dividends back into buying more shares of the same company or other solid investments. This snowball effect helps your investment grow faster as time goes on. Buffett's success comes from his long-term approach to investing. He thinks it's best to buy and keep dividend-paying stocks for many years. This lets him benefit from compound growth and regular dividend income to build wealth. Buffett cares about how good a company's leaders are. He puts his money into businesses with honest and skilled bosses. These are people who have shown they can make smart choices for the company and handle money well. Buffett has talked a lot about how dividends can provide income and show a company's financial health and dedication to its shareholders. He sees dividends as a good sign of a company's strength and stability. By following these ideas, Warren Buffett has gained impressive financial freedom. His strict method of investing in top-notch, dividend-paying stocks has helped him to grow his wealth over the years. Key takeaways from Warren Buffett's dividend strategy. Put your money in solid companies. Pick firms that have strong basics, make money, and pay dividends without fail. These businesses are more likely to keep paying dividends and give you steady returns. Look into and choose stocks from well-known financially healthy companies that are known to be stable and have an edge over others. Search for a business edge, moat. Buy shares in companies that have a lasting business edge or moat to protect them from rivals. Such firms are in a better spot to stay profitable and continue to pay dividends. Find companies with a clear advantage over others, like a strong brand name, unique tech, or ways to keep costs down. Put dividends back in. Put dividends back into buying more shares to boost returns through compound growth. This method speeds up your investment's growth as time passes. Get a dividend reinvestment plan, DRIP, with your broker to automatically put dividends back into more shares of the same stock or other investments. Think long-term. Take a long-term view on investing. Keeping dividend stocks for a long time lets you benefit from steady dividends and the compound growth of your investments. Concentrate on buying and holding good dividend stocks for years instead of chasing quick profits. Look at management quality. Put your money in businesses with solid, dependable leadership. Good bosses play a key role in keeping finances healthy and making smart choices that back dividend payments. Look into the top teams of companies you might invest in, checking for a history of smart money management and honest practices. Check financial health. Make sure the companies you invest in have strong cash flow and don't owe too much. Companies in good financial shape are more likely to keep paying dividends or even increase them. Look at financial reports and important numbers like cash flow, how much debt they have compared to equity, and how much of their profits they pay out as dividends to see how stable a company's finances are. Ways to use Buffett's approach. Do your homework. Begin by looking into and picking top-notch companies that pay dividends. Check out financial news, company reports, and investment research tools to spot potential stocks. Put dividends back to work. Think about joining a DRIP to put your dividends back into your investments without you having to do anything, helping your money grow faster. Keep your eyes on the prize. Stay cool and stick to a long-term plan for investing. Don't let short-term market ups and downs make you want to sell. Keep tabs on your investments. Every so often, Take a look at what you own to make sure your investments still match what you're looking for in terms of quality and financial health. Seek professional advice. If necessary, talk to a financial expert to adjust Buffett's ideas for your own money situation and investing aims. By sticking to these ideas, you can use Warren Buffett's tested dividend approach to create a steady cash flow and aim for long-term money success. Getting by on dividends isn't just wishful thinking, it's something you can do if you have the right plan and attitude. By using Warren Buffett's tested ideas, you can create a steady cash flow and work toward being free. If you thought this video was useful, remember to click the like button and sign up for my channel to get more tips on investing and financial freedom. Tell me what you think about dividend investing in the comments below. I always enjoy hearing from you. I'll see you next time.